Hello and welcome everybody. I'm Stephen and I'm a popular investor on the eToro platform. As usual guys, please remember to like this video and subscribe to my channel and leave some comments below, and that will be really good, help spread the reach of my channel. Also, don't forget to check out my website as well, www.stephenbudgen.com, which also tells you a lot more about me personally as an investor. So today's video is going to be in the usual format, and we are going to be talking about what happened in the markets last week and how our portfolio did overall. Well, to get things started, our portfolio did very well actually during the market conditions. So our portfolio was up slightly above 2% last week. And if we compare that to the S&P 500, which was up about 0.8%, and then the NASDAQ, which was up about 0.1%, this is a really good result overall for our portfolio. And we're starting to build some really good momentum after a little bit of a tough September. So October is looking really good so far. There were several reasons for our outperformance in our portfolio last week, and one of those reasons was that our Chinese stocks did particularly well, especially those in the tech sector. So Alibaba and also JD.com also saw some nice rises, which helped contribute to our overall result last week. Also, in Europe and around the world, we have seen a shortage in energy, and oil and gas prices, and especially natural gas prices, have increased a lot over the last few months. And also we have seen that the oil price has now hit a 7-year high. And this has really helped our oil and gas stocks such as Chevron and also Canadian Natural Resources Company. And this has also contributed to our overall good result. Also, we've seen some really good performance in crypto over the last week, and especially Bitcoin, as it's been outperforming a lot of the different altcoins. And one of the reasons behind that is that it's expected that there's going to be an approval of a Bitcoin ETF, whether that be a futures-based or physical-backed or spot ETF. This is driving a lot of sentiment in the market and was really good overall for our crypto prices last week. As we move on to our global market update, and we will start off in the US, and the US was driven by a number of different narratives last week, and this really affected sentiment. So one of those narratives was around oil and gas prices hitting 7-year highs, and there was also some news released from the US that all the oil producers in the US would stick to the quotas that they had been provided, and that they would not be putting additional supply into circulation, into production. So this was really good again for oil and gas prices, which really saw them surge and hit those 7-year highs. So I have been talking about a commodity super cycle for quite a while now, and we are starting to see it play out. And one of the reasons why we are entering into that phase is shortly after the pandemic took its grip, the demand for oil went down quite considerably. That's because the majority of oil is used in cars, and people simply were not driving around and going through their everyday business. Now the demand has increased significantly, but a lot of the oil producers were not producing at the high levels that they had been previously before the pandemic. And that has caused kind of a supply crunch. And this is one of the reasons why we are starting to see an oil shortage now. And as well as that, there's also issues around the transportation of oil around the world as well, which is also providing a further crunch on oil supplies. And I'm expecting the oil price to continue to go up, and I really wouldn't be surprised over the next couple of months if oil was sitting at over $100 a barrel. And I think I'm going to add to my existing oil positions slightly to take advantage of a situation that I think is quite likely to happen. The second narrative that was buzzing around the US last week was to do with the debt ceiling. And I wrote an in-depth article last week on eToro which explained a bit more about what the debt ceiling was and its implications on the overall market. So check that out if you haven't read that yet. But what happened was that the US government actually hit the limit on the amount of debt that they were able to have. And what happens is that has to be voted on to increase that debt limit. And what happened is Republicans were actually opposing that. And there was some political jousting between both parties. And one of the main reasons why the opposition parties do this is because they want to make out the ruling political party as being irresponsible or spending too much money. But actually, really, in reality, over 95% of that debt was actually already spent before President Biden actually came into power. So there was a statement last week by Janet Yellen who said that if the US did not extend the debt ceiling, that they were going to run out of money by the 18th of October and were not able to pay their bills. So this caused a lot of panic in the markets, and we saw some of the stock prices go down last week. And then what happened was there was then discussions in the Senate, and it was agreed by both the Republicans and the Democrats that they would increase that debt ceiling. And they've increased that debt ceiling by about 420 billion. And it's been extended, and they're expected to be able to pay their bills up until December 2021. But I do not expect that there'll be any problems after that. I think it's being used as a political tool, and I expect that to be increased again over time, because throughout the whole of the US's history, there has never been a major default on debt. And I don't expect that to happen, but I think it's political parties trying to play their cards when they can and try to use some leverage to be able to get their way in forthcoming policies and bills, etc. So it's not something I'd worry particularly about, but it did cause some ripples in the market last week. We also saw the release of some good data from the US last week. And the non-farm payrolls actually increased by 194,000, which showed good growth, although it was slightly below consensus estimates. And we also saw that wages had actually increased on an hourly basis by about 0.6%. So it's showing a growth in wages overall for the general citizens of the US. But obviously this may have a slight effect on some of the businesses as the wages increase. So there were also some issues last week with major tech companies in the US. So Facebook had a massive outage on their server last week, which actually took down both Facebook, Instagram and WhatsApp, which are all owned by the Facebook group. And they were actually offline for quite a few hours, which caused a lot of disruption. And actually Facebook was down about 4% last week overall. Another major issue that happened last week is there was a big hack on the online platform called Twitch last week. And this is a company that is owned by Amazon. And it was quite a major hack because they managed to get the majority of users' data, including passwords. And also they uploaded a lot of sensitive information from Twitch about who the top content creators were and how much money they had made. So this was a major hack. And this doesn't seem to have had much effect on Amazon as a parent company this week. But I see it as a significant hack, and I think it's going to be very difficult for them to recover. As we move on to Europe now, and the major indices in Europe generally tracked moderately higher last week. And again, a lot of the stories were dominated around the rise in natural gas and also the shortage in natural gas overall in Europe. And this has been caused by mainly two different things. So one of them is an increased demand for natural gas. And the other is to do with the fact that Russia have severely cut the supply of natural gas to Europe. And they prefer at the moment to supply to other countries such as China. And this has left a big natural gas shortage and also an energy shortage. And this is really threatening to curb production. There was also a lot of discussion last week with the European Central Bank policymakers, and there was a lot of concerns again about increased inflation. And again, they reiterated the fact that they expected it to be temporary. And even Christine Lagarde actually had a speech last week in which she said not to panic about inflation and prices going up overall. And also not to worry about the energy shortage because she expected it to be temporary. Whether you believe those words or not is entirely up to you, but I do not believe that it is in the control at the moment of the ECB or even the Fed in terms of inflation. And I think we are going to be expecting a lot higher inflation numbers over the next couple of months before they can make any meaningful impact in trying to reduce those inflation numbers. We also saw another country in Poland who actually increased their interest rates last week, and this was a little bit unexpected, but we have seen this move from a few different countries in the European zone over the last couple of months, and I expect that there will be some other European countries that start to slightly increase their interest rates over the next coming months. So as we move over to China now, and China, the markets were closed for quite a lot of the week last week, as it was something called the Golden Holiday, and the markets were generally shut. However, the market did finish slightly up overall for the week. Also, some really good information released from China last week in regards to the Purchasing Manager Index, or the PMI figures. And the PMI figures showed that it was at about 53.4 last week. And if we compare that to the previous month at just over 47, this shows that there has been some good growth overall in the manufacturing and also the service sector. There was also some data which said that the tourism revenue had actually decreased by 5% from the prior year on last week's holiday as well in China. So this does indicate, although they haven't been released yet, that the retail sales in China could be less than expected in October overall. China has also not been immune from the recent global energy shortage, and the Chinese government have asked for coal production facilities to actually increase the amount of output, and they've actually ordered some of the previously closed facilities to reopen again in order to try to reduce that shortage of energy that they're having throughout the country, which has caused even some factories to have to temporarily stop work. There's also been continued fears around the China property market, and as we know, we've been talking about the Evergrande situation over the last couple of weeks, but there's also been other Chinese development companies which have also been struggling to pay their bills. So one of those is a company called 𝗱𝗶𝗀𝗃𝗃 Holdings, and they actually they actually defaulted on one of their loans, which was about $230 million last week. And there is expected that there's going to be other development companies around China who are also going to struggle. We also saw the reduction in the number of home sales last week in China, and this further adds to the overall worry about the property market there. And Evergrande over the last couple of weeks have been doing their best to reduce the amount of debt. We saw that they sold a part of Shenzhen Bank last week in order to reduce the amount of debt, but they continually have these times where they have to pay these debts, and they're at real risk of defaulting if they do not continue to pay some of that debt by selling some of their assets on their balance sheet, such as properties, also other companies that they own, and urban development areas. So it's something to watch, but I think the Chinese government are working with them very carefully, and they're trying to help them to facilitate buyers for some of their assets and try to unwind some of that debt that they'd actually picked up over the last couple of years. But whether they can do it in time is another matter. So as we move on to the top 3 performing stocks of last week. So the top performing stock of last week was JD.com, and that was up about 12.3% last week. And as I mentioned at the start, we have seen an increase in the stock prices of technology stocks in China this week. And that brings me on to the second best performing stock of last week, which is Alibaba. And again, that's not unexpected. And it was actually up about 12.1% last week. And the third best performing stock last week in our portfolio was Canadian Natural Resources. And that was up just over 8% last week. And we've seen an increase in the overall energy prices, which has been very good for the stock overall. As we move over to crypto now, and it was actually a really good week overall for crypto as a whole, but especially for Bitcoin. And Bitcoin actually increased about 15% last week and actually reached again the $1 trillion market cap level. And actually now at time of recording this video is at about 56,000. And there's been a lot of positive sentiment around Bitcoin lately. And why is that? Well, one of the reasons why there's a lot of positive sentiment is the fact that a Bitcoin ETF is expected to be approved within the next couple of weeks. So there are a lot of different applications in from a number of very large companies who have actually filed for a Bitcoin ETF, and it's not known what is exactly going to be approved. So there is both physical Bitcoin ETF, so that's a physically backed Bitcoin ETF where they have to have the Bitcoin in their reserve. And there's also a futures-based Bitcoin ETF. It is expected that it's more likely that that Bitcoin futures ETF is going to be granted first. And one of the reasons why is that the majority of these are on recognized and licensed exchanges. So we saw that in 2017 when the CBOE futures ETF was approved. And it's expected that we're going to see that first within the next couple of weeks. So there is a lot of positive sentiment and buzz around that. And I think that could be a really key catalyst for us to have that really explosive Q4 that I've been talking about over the last several months. So another thing that's being considered as well is that Mexico are considering having a Bitcoin ETF. So this is just really adding to the number of Bitcoin ETFs that are being approved around the world. And this just makes it much more accessible for Bitcoin to draw in some of that capital from around the world. There was also an interview with George Soros this week as well, which said that he owns crypto. He didn't go into the details of what crypto he owned, but obviously he's a very legendary hedge fund manager. And the fact that he puts capital into crypto is very positive and shows good sentiment overall in the market. He also additionally said that he was very interested in decentralized finance, in DeFi, and he thought it had a very good future. We have also continually seen an outflow of Bitcoin from exchanges to private wallets over the last couple of months. And last week was no different, albeit it was quite a small outflow. And this really shows that people are much less likely to be selling their Bitcoin at this time. And also we have seen a lot of miners increase the hodling capacity of Bitcoin, and they're actually increasing the amounts of Bitcoin that they're holding at the moment, because quite simply it's a lot easier for them to get cheap financing from banks to be able to cover their overall operations of Bitcoin mining. So at the moment, they don't think it's in their best interest to be selling Bitcoin when they can get such cheap capital, and they expect Bitcoin to rise over the next few months. Overall, it's not a surprise to me that Bitcoin is starting to outpace some of the altcoins. This is very normal in this stage of a Bitcoin cycle, towards the later stages of a Bitcoin cycle. And we quite often see these very explosive rises from Bitcoin towards the end of that cycle. And then usually what happens is a little bit later on down the line, those altcoins start to explode as well. But it's usually started by an increase overall in Bitcoin. So overall, it's going to plan, and as I expected it to. As usual, as the Bitcoin price continues to increase, and other cryptos as well, I will continue to be sensible, disciplined, and take profits whenever I can, and to diversify into other areas as per my strategy. So our portfolio is up nearly 6% so far for October, which is a really great start overall to October. And our portfolio year to date for 2021 is actually up over 126% for the year. And this is a really tremendous result, and it's something that I'm very proud upon. And I think it's something that we can build upon for the last couple of months of the year, and achieve really good results for my 𝗃𝗶𝗀𝗀𝗀𝗀 community. And I really want to thank you for your patience and your support. And it's really a pleasure to interact with you each day on a daily basis. And I really appreciate all of you. And I will continue to work hard to not only grow the profits within your portfolio, but also protect your capital as well, because this is extremely important to me. Thanks very much for listening to my video today. And as usual, please don't hesitate to leave a comment below, and I'll be happy to get back to you. And also don't forget to join my 𝗃𝗶𝗀𝗀𝗀𝗀 community group on Discord. I will leave an invitation below, and you are very welcome to join. And don't forget to spread the word and to recommend me, if you don't mind, to your friends, your family, and anyone that might be interested in investment. That would be really great to help spread my reach. So thanks very much, and have a good week ahead.